Hey everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin's fair value and why things might be worse than you would think looking at one of the most prominent current fair value models that a lot of people talk about. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. Put a lot of updates about our risk indicators and more over there. So what I want to talk about today, first I'm just showing you here a chart of Bitcoin's price. I want to talk about fair value, and people have defined this in different ways. The stock to flow model infamously says, speculated or projected that the fair value of Bitcoin right now would be at 100K. Obviously, that did not come to pass. But one of the other models that I want to highlight and talk about, because a lot of people look at this one as being kind of the best model we have for Bitcoin's fair value, is simply this kind of logarithmic time-based model. So you'll see analysts out there, Benjamin Cowan is one of the big proponents of this type of model. He talks about it a lot, and others do as well. This idea of this logarithmic curve that you can fit to the Bitcoin price. And the argument that people have is that, if Bitcoin's above this value, it's kind of in a bubble, and if it's below, then it's in a bear market. And so generally speaking, kind of being below the fair value tends to represent relative value, and being above is when the asset's starting to get overheated, that tends to then go to these big blow-off top type moments. And the reason that I want to kind of, pushback is one way of talking about this, but I want to offer a different way of thinking about this, basically. So this model is kind of simple, and maybe, one of the reasons that people might like this model is its simplicity, right? It doesn't make any assumptions about anything. It's purely just using time as the only predictor, and then looking at the trend over time, and then saying, that if this current trend continues, we can then project out into the future where Bitcoin's price will be. And that's one of the nice things about this model, because time is the only input. You can just project out as far as you want and get an estimate of where Bitcoin's price would be should this kind of overall trend continue. But the issue that I have with this model, and I've made previous videos in the past where I kind of have put forward different ways that we can think about fair value, other models that we could look at that might give different estimates. And the one I want to talk about today is one that actually takes into direct account the stock market, specifically the NASDAQ. So I actually put out a video yesterday where I had talked about a model where I just only used the NASDAQ price to predict Bitcoin's price. The model I want to talk about now, though, is a little bit different, and I think a little bit more interesting when comparing it to these time-based fair value models, kind of as a potential alternative. And so that model is what I'm calling the NASDAQ adjusted fair value for Bitcoin. And so I should note that both of these models that I'm showing you were fit to only Bitcoin data up till the beginning of 2020. So all of this data through here we can consider test data. So the model is not trained on any of this data. This is just what the model would predict based on observing these values. But again, it's fit to this data here. So there's no hindsight bias that's happening past past this point. This is all kind of what it would have been predicting in real time had you just fit the model here and let it run. And the same is true for this one here, that what I'm calling the NASDAQ adjusted fair value, that this is just what it would predict across time, after you had fit it in beginning of 2020. And what's interesting about this model, and what you can see, is that, it's not going to be quite as smooth as this one, obviously. And the way this model is working is I'm basically just adding a term that accounts for the NASDAQ price to the model, the logarithmic regression model that I use here. But then what I'm also doing is that, one of the things that you have to, observe about any assets correlation to the NASDAQ is probably going to be changing over time. Something like Bitcoin, its relation to the NASDAQ has probably changed over time. So I've actually also included a term in this model that also accounts for the fact that the relation between Bitcoin price and the NASDAQ price is probably changing over time as well. So that's how this model is built. It's using time, NASDAQ price, and this special additional term that accounts for the change in the relation between Bitcoin price and the NASDAQ price over time. And what I really want to draw our attention to with this model is, obviously you can see it seems to do a pretty good job, especially, coming off of this point when it was fit. But what I really want to draw our attention to is what's going on right now, basically. And really these two models give notably different interpretations about Bitcoin's current price action. You can see this, right? If we look at this time-based model, what it's saying is that, Bitcoin, when it fell off, below, 30K, then especially down here at 20K, it's saying that relative to fair value, it's quite oversold. It's in a relative value zone. It's not too dissimilar from these kind of some of these points in the past that we've seen. And it's saying, all right, this is a value zone. this is looking more and more like a plausible, bear market bottom potentially, and especially from the context of diminishing volatility, right, where deviations off this trend line are getting smaller and smaller over time. You might expect that the bottom of the bear market will also not have to fall as far as some of these previous ones to find its bottom. But if we look at this NASDAQ adjusted fair value, we're getting a very different story about the current price action. In fact, it's basically arguing that we're only just basically at fair value right now from this model's perspective. We haven't really fallen below it. And again, if we're really looking at this argument as, is this now a value zone? This model is saying, yes, it is. This model, not so much. And so if one were just merely to be looking at this time-based model, they might be getting a different interpretation than what this NASDAQ model would be suggesting. And I just think this is important to bring up because, again, what you'll see over and over in this space, now that the stock to flow model has been pretty much thrown to the sidelines, discredited, this is the model that a lot of people look at. It's just this pure time-based version. And if you're purely making your estimate of Bitcoin's value relative to this, and if you think that this is kind of the only model to be looking at, you'll get a different interpretation than if you look at a model like this. And I think this is really important to consider because, again, we've seen in the past, based on this model fit, we can go quite a bit below this NASDAQ adjusted fair value level. More recently, we've been kind of trading closer to it and closer with diminishing volatility, and also probably with the extent that the relation between the NASDAQ and Bitcoin might have been increasing over time. But again, bear market bottoms have always fallen below this level. We haven't done that yet. And so at the very bare minimum, if we would do the same thing that we've done historically, we'd actually expect more pain here if this really is going to be a bear market bottom. Now, the counterfactual of that could be, it is possible for us to bounce off of this model, right? We did it back in 2013, and then, after the fit of this model, so this is just all real-time, predictions, we did it again in the summer. So, it's not impossible that we couldn't do that again. But, I think my base case would be that this is a full-on bear market. I think that if historical patterns are going to be predictive, if you're going to make kind of compare to previous times, you'd expect us to fall below fair value here. We just haven't seen that yet. Now, the good news, of course, is that the NASDAQ is not fixed, and the NASDAQ could rally, and that would actually pull this fair value back up. And if that were to happen, then, it could be that this would run up, even if Bitcoin kind of stayed going sideways, and it would actually end up showing up kind of maybe sort of like what happened back here in 2018, a little bit different. But it would be really kind of the NASDAQ rallying and then the Bitcoin price following after. So there'd be this increasing gap because the NASDAQ is rallying. So that could certainly be a thing that would happen that could make this kind of thing happen without Bitcoin having to capitulate so much further. But regardless, this model is basically saying, don't be so quick to say that Bitcoin's price is in a value zone. We don't actually know that yet. And if you adjust for the NASDAQ and what the stock market is doing, Bitcoin's actually only just at fair value. And we know from these, from the past that Bitcoin can fall quite a bit below fair value before actually finding its bottom. So I did just want to mention this. So I'm not, trying to say this model, this time-based model is useless or anything, or that it's a worthless model that you shouldn't take into consideration. Obviously, this has a lot of utility just looking at it. I don't think it's a bad model. And the nice thing is it's really easy to project across time because time's the only input. But I do think that it's also worthwhile to look at these models to take more direct account things like the stock market price, because that then can give us an idea of, based on what's going on, not just with kind of its overall trend on a more time-based characteristic, but also what the stock market's doing, where might we actually expect fair value to be? And right now, it's not looking like such a value zone necessarily. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, put a lot of updates, better indicators, and more over there.